Hello students, welcome to AffairsCloud.
We have an app called Careers Cloud which you can go and download it from the Play Store. So after downloading it, you can easily log in using your Gmail ID. Once you have logged in, you will be redirected to a home page which contains 4 tabs beneath it. One is Home, the other is All Courses, next is My Courses, and the last one is a Doubt Session. So under All Courses, you can access various types of courses like Reasoning, Quant, English, and also exam specific courses can also be accessed under this All Courses. If you click this Crack Current Affairs, you will be redirected to this page. So under this, you can see various tabs that are available. So here, if you see, the current affairs will be available in English medium, this under Hindi medium, and here banking awareness, we will provide you the monthly compilation of the banking news and current affairs exam PDF, and also special current affairs, which includes mainly the budget, the union budget, the economic survey, which is very important from the exam perspective. And this is topic wise content where that topics news related to the specific topic, they will be combined together and provided to you. For example, see appointments. All the appointments in that particular month will be combined together in a specific place. And similarly, in case of banking, economic news, so all will be combined together. So this will be easy for you to relate to each other news. Next, you can access the daily current affairs on a daily basis, weekly basis, and also on a monthly basis. So after reading the weekly or the daily news, you can also attend our quiz in order to strengthen your knowledge. Under the monthly current affairs, if you see, there are 2 types of PDF that are available. One is the pocket PDF, the other one is the normal PDF. This pocket PDF will give you a brief content of our current affairs, and this will provide you a detailed analysis of the current affairs. So it is always preferable to read this detailed analysis and then have a go through of this pocket PDF. Next is that we also provide you the PIB news apart from the current affairs. So you can go and access our PIB news on a daily basis from this path. And as I mentioned, this special CA covers very special topics like budgets and economic survey. After reading the content provided in this PDF, you can go and attend the quiz given below. And next is the exam perspective PDF. So if you see IBPS PO mains, IBPS RRB clerk, SBI clerk, so these are all exam perspective PDF. So if you go and check, these PDF will contain around 5 to 6 months of the current affairs, which has high chances of high chances of being asked in this SBI clerk mains exam. So it is very useful to go and read this PDF from an exam perspective point. Today, we will be covering June 3rd week banking and finance awareness news. Moving to the first news. The first news is about a report that has been released by the UNCTAD. So let us discuss the report in detail. So the United Nations Conference on Trade and Development, they have released the report World Investment Report 2025. Okay, the title of the report is International Investment in the Digital Economy. Remember the title, it is very important. International Investment in the Digital Economy. So this World Investment Report, if you see, it is an annual publication, that is, it is released once in a year. So what are the details that are present in this report? So it has details like global trends in the FDI, that is how much FDI has been invested this year, to which country the maximum FDI has gone, which country has invested the maximum FDI, all this, regional level, national level, country level, all these details are present in this investment report. With respect to India, if you see, the India's foreign direct investment inflows. In 2023, it was 28.1 billion, but it has reduced little bit in 2024. That is to 27.6 billion. Okay. So previously to 28, now it has been reduced to 27.6 billion, a down of 1.9%. Okay. So it has decreased by 1.9%. Sorry, 1.9%. So let us look into the FDI flows in ranking. Okay. So out of the total FDI inflows in various countries, what is the rank of India? So if you see, in 2023, the India's rank in FDI inflows was 16th rank. Now it has been improved to 15th rank. So if you see the total FDI inflows, it has decreased by 1.9%. Okay. If you see by the value, it has decreased by 1.9%. But by the rank, if you see from the 16th rank, it has improved to the 15th rank. Similarly, if you see the FDI outflows, that is how many people from India have invested outside India. Okay. So that if you see, that rank has also improved from 23rd rank to 18th rank. So remember, India's ranking in FDI inflows, if you see, it is 15th, And in case of FDI outflows, if you see, it is 18th. Remember these two rank, it is very, very important. So India is the leading recipient of the foreign direct investment in the South Asia region. So in the South Asia region, among all countries, India had received the maximum FDI. So greenfield projects, if you see, greenfield projects are the projects like that, they are new projects. Okay, like in case of brownfield, you would have heard about this, right? Brownfield project. So these projects, if you see, they are already existing. Okay, the infrastructure, the manufacturing plant, everything is existing. Just an improvement or an innovation is being done. But greenfield project, if you see, these projects, they are developed from the scratch. Okay, that is what is called as the greenfield project. So in the greenfield project, if you see, India ranks 4th globally. That is, we have invested maximum in this greenfield project. That is why we are in the 4th position. So around 1080, we have invested in 1080 greenfield projects. Similarly, international project finance. Okay, so we have many people outside India, they have invested in our projects. So in that, if you see, we rank among the top 5. So India is among the top 5 with respect to the international project finance, and with 97 deals this year. That is, we have signed 97 deals this year. Remember, in greenfield projects and the international project finance, in both the cases, we are among the top 5. Next, top 5 host economies. Top 5 host economies means that maximum FDI inflows. Okay, first, if you see, the maximum FDI was into the USA, next Singapore, next Hong Kong, next China, next Luxembourg, and we are in the 15th position that we have already discussed in the previous slide. Okay, so if you see Luxembourg only, it has a huge appreciation. Okay, from -9, that is, no investment was there in 2023, but in 2024, 106 billion USD dollars. Okay, this all numbers are in terms of billion USD billions. Okay, you don't have to remember the numbers, but you have to remember the top 5 and India's rank. Okay, USA, Singapore, Hong Kong, China, and Luxembourg. Luxembourg, it is a very unique thing because from negative, no FDI inflows in 2023, but now if you see 106 billion FDI inflow in 2024. The remarkable change has been observed in Luxembourg. Remember the top 5 and the rank of India. Next is top 5 home economies. That is FDI outflows. Maximum FDI outflow is from which country? So again here the first position is by USA, next followed by Japan, China, again Luxembourg, Hong Kong, and then we are in the 18th position. Again here also you have to remember the top 5 and our rank. That is India's rank. So if you see the global FDI, though it has shown that it is 4% higher, but actually if you see it has dropped by 11% for the second year. So what does this 4% higher, 11% lower means? See, this 4% higher is because of the European conduit economies. That is, there are a lot of global havens. Okay, tax havens. Tax havens means if you have your company there, you don't have to pay any tax on your profit. So they have just established the company. That is, the companies only are there in the paper, but they have not invested any in manufacturing planet or in any actual company. Okay, there are all these investments. This 4% higher is there, right? That higher amount is only due to papers. That is, the investment is only in the papers, but not actual investment has taken place. That is why they're telling the actual growth, if you see, it is dropped by 11%. So when you exclude flows through the European conduit economies, just to save tax, these flows had happened. Okay, so when you exclude that, because they are not actual investment, because they have not made any investment in the infrastructure or in the manufacturing planet. Okay, so it has actually, the global FDI has actually dropped by 11% for the second year. Next, FDI to the developing countries, if you see, it has been stable. That is around $867 billion. And developing Asia, if you see, they have been the largest recipient. Okay, this is region-wise. First we saw the country-wise, now the region-wise. So developing Asia, they have received the maximum FDI inflows. That is, though they have received the maximum FDI inflows, it is slightly lesser than compared to the previous year. That is 3%. You don't have to remember this number, but you have to remember that developing Asia received the maximum FDI inflows. And this 3% decline is because of the decline in the FDI in China. Okay, that is, in China, the FDI declined by 29%, which is very huge. That is why this 3% decline happened. Next, FDI inflows in the least development countries, that is LDC, if you see, it has also increased by 9% at $37 billion. Next, FDI inflows in Africa, if you see, that has increased huge by 75%. Okay, it is a very huge increase. Compared to the previous year, it has increased by 75% to $97 billion. This is the highest value ever recorded in Africa. Next, sustainable development goals. Okay, there are certain sectors that has to be invested for the accomplishment of the sustainable development goals. I'm sure you would be aware that there are totally 17 sustainable development goals, and these 17 sustainable development goals has to be achieved by 2030. Okay, this is as per the UN. Okay, UN is the one that has established the 17 sustainable development goals. For that, you have to invest in certain sectors like renewable energy, clean environment, and also in the food, agriculture and all. Okay, but if you see, those sectors that are very important for the accomplishment of sustainable development goals, investment in those sectors have actually decreased this year. That is, it has actually declined this year. So investment in energy and gas supply, it declined by 28%. Next, project finance and renewable energy, that also declined by 16%. So both these sectors, there was seen a decline, okay, by 28 and 16%. So this is very difficult because only when the investment increases, you will be able to accomplish the SDG goals, right? But they are going to decrease. Means this is a question mark that how we will be able to accomplish this SDG. Next, number of greenfield projects in the industrial sector, if you see, that has increased by 3%, and the global merger and acquisition activity, it has increased by 10%. Okay, remember, greenfield project increased by 3%, and merger and acquisition, that has also increased by 10%. Next, greenfield investment in the digital economy. Okay, that if you see, that has increased almost 3 times. From 130 billion in 2020, it has increased to 360 billion in 2024. So almost it has increased by 3 times. The main things you have to remember from this news is that World Investment Report. Who releases this? It is an annual publication. Okay. Next, the FDI inflows. What is the rank of India? And who are the top 5? Similarly, FDI outflows. India's rank and the top 5. You have to remember this. Okay. And the maximum region that has received the FDI is developing Asia. Right? And if you see sustainable development goals, the sectors, if you see, that has decreased, you don't have to remember the percentage, just have to remember that in the sustainable development goal sectors, the investment has decreased. And also in case of greenfield, okay, greenfield projects, that is greenfield investment, and also the international project in finance. Remember these two. In case of greenfield and also international project finance, India is among the top 5. So these are the main details you have to remember from this report. That is enough. Next, if you see, the Jupiter Money, it is a fintech company, and the Thrissur-based CSB Bank, they together has released a credit card called H plus CSB Bank RuPay credit card. Okay, remember the two entities and the card name that has been launched. So here, now let us look into the features of the card. So it is a lifetime free card. It is UPI enabled payments, that is, these credit cards, you can link it to your UPI and make payment via the UPI itself. Next, 10% cashback is there on when you purchase on Amazon, Myntra, Nikon, and 5% cashback if it is Make My Trip and Yatra. And users can get over up to 50,000 in annual rewards. Okay, these are the features of this card. Moving to the next, KPR, this is also a travel-based fintech company, and Federal Bank. Together, they have launched KPR Federal RuPay credit card. Okay. So here the features of this is that this is the first credit card in India to combine both Visa and RuPay network with UPI functionality in single card. Okay. So we know that Visa, RuPay and all, they are card processing network. So both these are combined with UPI in the single card. So this is zero foreign exchange markup. So when you actually make a foreign exchange transactions, there will be a small fees. Okay, that fees will not be applicable if you use this card. Next, unlimited lounge access. Next is CSB Bank MD and CEO is Pralay Mondal. Okay, headquarter is in Thrissur. Then Federal Bank MD and CEO is KVS Manian. Remember, headquarter is in Aluva. Remember the bank name, the headquarters. Okay, remember the two entities in both the news. The next news is about a loan that has been approved by the Asian Development Bank. So, Manila-based Asian Development Bank has approved a loan amount of $109 million. Okay, if you see, if you convert that into rupees, it is around 927 crores to Gujarat. And where will that money put into use? It will be put into use in the Gujarat Skills Development Program. Okay, this is where the money will be put into use. So, what is this Gujarat Skill Development Program? So here if you see, this program will provide Gujarat workforce with the advanced industry relevant skills to improve job readiness. See, there is always a skill gap between what you learn but what actually the industry wants, right? That gap is being covered by this program. Okay, so the actual they will prepare you for the job. The actual skills required for you to recruit into the job, those skills will be trained in this program. So it will focus on 7 high priority industries, namely logistics, automotive, manufacturing, information technology, renewable energy, healthcare and agri-tech. Okay, these are the 7 high priority industries. Here what you have to remember is the bank involved, that is Asian Development Bank, and the program name, and also the amount. Amount here is 109 million USD dollars. The president of Asian Development Bank is Masatu Khanda and it is headquartered in Manila. Next is Mumbai-based NPCI, that is National Payment Corporation of India, and the Hyderabad-based Institute for Development and Research in Banking. Remember, Institute for Development and Research in Banking Technology, they together have signed a MOU, that is Memorandum of Understanding. Now, what is the purpose of this MOU? The purpose of this to enhance the cyber security and the resilience, okay, because the digital payment, if you see, that is expanding tremendously, okay, exponentially it's been expanding, right? The volume compared to the previous year, it has expanded so much. So is a fraudulent activity also. That is why it is very important to enhance the cyber security. So for that, what will these two entities do? So basically, the NPCA and the IDRBT, they will jointly conduct training programs for the professionals. Okay, so basically the bankers will be trained on what? On the banking and payment system, on the cyber security, on the data privacy, on all these things, the banking people will be trained. Okay, that is the purpose of this MOU. Next is Odisha-based Vedanta Aluminium. Okay, Odisha-based Vedanta Aluminium, that is the largest producer of aluminium in India. Remember this, very important. Odisha-based Vedanta Aluminium Company, it is the largest producer of aluminium in India. They have signed an MOU with the Mumbai-based Central Bank of India. Okay, they've signed MOU with Mumbai-based Central Bank of India. Now, what is the purpose? This purpose is to provide collateral-free financing, that is collateral-free loan to the MSMEs. So, how much loan? A loan ranging from 10 lakhs to 10 crores will be given at a lower interest rate. That is the purpose of the MOU. Okay, MSME financing without collateral and also loan ranging from 10 lakhs to 10 crores at a lower interest rate. Next is about the appointment that has been done by the RBI. So, RBI has approved the reappointment of Pralay Mondal as the MD and CEO of CSB Bank, and also RBI has extended the tenure of, that is 6 months tenure extension has been provided to the MD and CEO of Yes Bank, who is the Prashant Kumar. Okay, remember the appointment of Pralay Mondal, he is the MD and CEO of CSB Bank, and also 6 months extension to Prashant Kumar, the MD and CEO of Yes Bank. We have launched a new course called Static Banking Awareness course. Now this course will be helpful for students who are preparing for the banking exams and for the regulatory body exams. And also, recently, you would have seen Paytm Bank in news frequently. So when an aspirant reads this news, he would have ample number of questions like what is a payment bank, what are the norms for it, and which is the committee that has launched it. So this static banking awareness course lays a foundation to the current banking and finance news. Now, you have to download our AffairsCloud to access this course. Once you have logged into our app, you can go and click this all courses icon, and then you'll be redirected to this page. In this, you have to go and click the static banking awareness course, and under the details tab, you will be able to see a brief about this course. And under the part tab, it will contain all the contents, all the topics of the contents that are currently available in this course. We are working on this continuously, and this will be completed within 2 months. Under the free tab, you can go and access one content, that is the origin and development content, for free. You can go and read this content and have an idea about this course. After reading this content, do attend the quiz that is also available under the same tab. Now, our team has allocated ample amount of time and resources to curate this content. We have created this content from various books and from various verified websites. Our content is better than any book that is available in the market. This is because we update this content on a dynamic basis.
For example, there are currently 39 DRTs that are available in the country now. In future, if one more DRT is created or added, then it would become 40. So we would update this content on a dynamic basis. But in case of books, you have to wait for the next publication for this updated content. Nowadays, a lot of practical questions have been asked in the banking exams. For example, how many public sector banks are available on the stock exchange? Which is the payment bank that is being listed on the stock exchange? So, we try to cover as many practical questions as possible in this course. Apart from this, we also provide you a question bank that will contain around 3000 questions and the previous year questions along with it. We also have a dedicated tab that will release the important RBI notification and the frequent news released by the RBI. You can use this code B15 to avail 15% discount. This is one of the highest discounts that we have offered until now. So do avail this code B15 while you purchase the course.
The next news is about inflation projection. So if you see National Statistical Office, okay, NSO, that works under the Ministry of Statistics and Program Implementation. This NSO is responsible for releasing the inflation data every month. Okay, so inflation data, if you see, it is released in the form of CPI, Consumer Price Index. So that is released every month by the National Statistical Office. So here now for the May 2025, it has released CPI for rural, urban combined. Okay, so here if you see, the inflation has come down compared to the previous April 2025. That is from 3.16% inflation in April 2025, it has come down to 2.82%. Okay, so it has tremendously come down from 3.16% to 2.82% in May 2025. And this inflation, if you see, it is a 75-month low inflation, almost 6 years low. So that low, the inflation has gone down. So if you see various factors that has helped in bringing the inflation so down is, first is food inflation. The food inflation in May 2025, it is the lowest since October 2021. The main reason is the vegetable prices have gone down by -13%, the pulses price has gone down by 8%, then spices by 2%, and meat price has increased just by 0.39%. Due to this, if you see, due to the food inflation being the lowest since October 2021, the inflation, the overall inflation has also come down. Next, if you see, let us see the rural inflation part and the urban inflation part. So the rural inflation part, if you see, it has come down from 2.92% to 2.59%. Similarly, food inflation, if you see, it has almost halved. It has come down to half. That is from 1.85% to 0.95%. So almost 50% reduction is being observed in the food inflation. Next, urban inflation, if you see, that has also come down from 3.36% to 3.07%. And in case of food inflation in urban, it has come down from 1.64% to 0.96%. Okay, remember the overall inflation has come down, that is 75-month low. Okay, and the food inflation has also come down, that is it is the lowest since October 2021. Rural urban inflation both have come down, and main contribution to rural urban inflation to go down is again the food inflation. Next state with the highest inflation rate, if you see, it is Kerala. The inflation observed in the month of May in Kerala is 6.46%, and state with the lowest inflation rate is Telangana, where the inflation rate observed was just 0.55%. Remember the state name also, it is very important. Next, if you see, Ministry of Finance has approved or appointed Anuradha Thakur as the first women secretary of Department of Economic Affairs. Okay, remember Anuradha Thakur is the first women secretary of Department of Economic Affairs. Very, very important news. So she will be replacing Ajay Seth, who is expected to retire on 30th June. So she will be taking in the position from 1st July. Okay, till 30th June, Ajay Seth will be the Secretary of Department of Economic Affairs. From 1st July, Anuradha Thakur will be replacing him. Next is about an investment. So IFC, the International Finance Corporation, which is one of the arm of the World Bank, okay, it has planned to invest $60 million in the Mumbai-based India Business Excellence Fund 5. Okay, this is one of the fund of the Motilal Oswal. Okay, Mumbai-based India Business Excellence Fund 5. So here, if you see this fund, majority fund, what is the purpose of the fund? To raise money, and that money will be invested in various stocks, right? So here, if you see this money, this fund is planning to raise $750 million. Okay, remember they're planning to raise $750 million and IFC will be investing $60 million. So where will this money be invested? So this money will be invested in 12 to 6 mid-market companies with high growth potential, particularly those expanding services beyond major cities to low income states. Okay, this is where the money will be invested. Here what you have to remember that 60 million USD by the International Finance Corporation and the overall fundraising amount is 750 million USD. The next news is about GDP projection. So the Investment Information and Credit Rating Agency has projected that India's GDP growth will be around 6.2% in financial year 26. In financial year 25, it was observed 6.5%. So the financial 26 is expected to grow little lesser than financial 25. In case of gross value added, if you see, it is expected to be 6%, but in financial 25, it was projected 6.4%. Similarly, the current account deficit, it is going to be in the range between 1.2 to 1.3%, and the fiscal deficit is going to be around 4.4% of the GDP. Okay, here you have to remember all the numbers. It is very, very important. So financial 26 GDP 6.2%, gross value added 6%, current account deficit 1.2 to 1.3, and the fiscal deficit is around 4.4% of the GDP. Remember all the numbers, it is very important. Next is Pune-based Bajaj Allianz General Insurance Company Limited, which is a joint venture between Bajaj Finserv and Germany-based Allianz SE. Okay, so remember the joint venture of Bajaj Finserv and Germany-based Allianz SE. So they, if you see, this company has launched first of its kind state-wise health insurance policy. So if you see the medical procedure or the medical amount, it varies from state to state, right? Especially the rent, the room rent and all. It is different from one state to another state. Similarly, the medical operation, that is also different from one state to another. So that is why it was very important to launch this state-wise health insurance policy, because from one state to another state, there are a lot of price differences that has to be incorporated, and that is why this state-wise health insurance policy was launched. So these options include both individual or family floater plans, and the sum insured ranging from 5 lakhs to 20 lakhs. Next is Mumbai-based Jio Financial Services Limited. It is an NBFC company. They have acquired a stake in the Jio Payment Bank Limited. Okay, remember this Jio Financial Services Limited, they have acquired, that is, they have purchased the shares from the State Bank of India. So previously, if you see this Jio Financial Services Limited, they had 82.17% stake in the Jio Payment Bank. Okay, and the 17% now it was purchased from the State Bank of India. So now if you see, they hold the entire 100% share now in the Jio Payment Bank. This 17% share that was purchased from State Bank of India was worth around 104 crores. So from it already held 82%, now it has bought the remaining shares and now it holds 100% shares of the Jio Payment Bank Limited. Remember this, very important. Next is RBI allowed strips in the state government securities. So if you see what is strips, strips is separate trading of registered interest and principal of securities. Remember the full form, separate trading of registered interest and principal of securities. So here if you see this strips option, it is already available for the central government securities. Now it is made available for the state government securities. So securities that represent either the principal or each interest payment of a bond, allowing them to be traded separately in the market. That is what is strips. Okay, remember the definition of strips. That is the principal and the interest. They both are separately given as in the form of strip and they can be traded separately. They are sold at discount and pays no interest until maturity. Now let me explain this with an example. Okay, there is a state government X. It has planned to raise, it has 1000 crores. Okay, so issue the state government securities, it will get 1000 crores. So who will buy this state government securities? You can also buy the bank entities, the financial institutions. Many people can buy the state government securities. Okay, say there is a person A, he has bought the state government security worth rupees 10,000. Okay, so he has paid 10,000 and now he has received the state government security. Now what happens is that now this strips option is available in the state government security. Now, what is this strips option mean? I'll again explain this. Okay, say suppose this person wants to strip his state government security. Okay, wants to strip his state government security. Now, how can he do that? Before that, I want to tell you that every bond or every security, state government security, they will have some coupon rate, right? Coupon rate is nothing but the interest rate. Say suppose in this 10,000 that he has bought, the coupon rate is 7%. 7% means what? How much it is? It is 700. Okay, so he will receive 7%. That is 700 every year, and the tenure of the bond is 14 years. So what does this mean? A has bought a bond, okay, worth rupees 10,000 rupees. This is the principal. 10,000 is the principal. He is paying 10,000. He has bought the bond. Okay, the tenure of the bond is 14 years. The coupon rate, that is interest rate, is 7%, which means that for 14 years, every year, this person A will get an interest of 700, and after the 14 years, that is at the end of the 14 year, he will give back the bond and he will get the principal back. Okay, that is what it means. So, he will get the interest for 14 years. Okay, every year he will get 700 rupees. The person will get 700 rupees. At the end of the 14th year, he will get the principal also. Okay, this is what this means. Now, what happens that this person now goes and tells that I want to strip my state government securities. I want to create strips of the state government securities. So, this, if you see, he has to go to the bank or the primary dealer who maintains an account with the Reserve Bank of India. Okay, because the stripping procedure, if you see, only the Reserve Bank of India can do. Okay, so if you see, this A can buy the state government securities from the Reserve Bank of India through a portal. There is an RBI direct portal, okay, where they can sell government securities, where the person can register his or her account in this RBI direct portal and can buy the securities. But if the person wants to create strips of the state government securities, that person has to go to the bank, that is the custodian or the bank or the primary dealer who maintains account with the Reserve Bank of India. Okay, so basically A will make request to the primary dealer. The primary dealer will make request to the Reserve Bank of India. The Reserve Bank of India first will check whether that state government security is eligible for making strips or not. Okay, not all government, if you see, the central government securities are already available or already eligible to create strips. Okay, now this state government security, it is whether it is eligible to create strips or not, it will check. So if it is eligible, it will create strips. What does this strips mean? It mainly means that it is a 14-year-old bond with a principal of 10,000 and a monthly interest of 700, right? So it will create 15 strips. Okay, 15 strips means 14 strips of interest. Okay, the value of this 14 strip, if you see, each will be 700 rupees because the interest is 700 per year, right? Next, one strip is the principal, and the value of that strip is 10,000 rupees. Okay, these many strips will be created and that will be available in the A's demat account. Okay, all this, remember, all this state government security should also be there in the demat account. That state government security will be converted into 15 strips. In this case, in this example, it is 15 strips, 14 strips of interest each and 1 strip of the principal. Okay, so now if you see, now A will have 15 strips in his account. Now these strips are tradable in the secondary market. Okay, these strips are only tradable in the secondary market. You would have bought the bond, state government security, okay, in the primary market, but these strips, if you see, they are tradable in the secondary market only. Now, why is this strips required? Why can't just it be as a bond itself? Say suppose this bond, state government security, was issued on June 2025. Okay, then when will the interest be paid? The first interest be paid? The first interest will be paid on Jan 2026. Okay. Similarly, the A person who had bought the bond, he has received 2026 interest, 2027 interest and 2028 interest also. Okay, in Jan 2028, he had received the interest. Okay, next interest when will he receive? He will receive only in Jan 2029. Okay, but now if you see in June 2028, he needs some money. Say suppose he needs 500 rupees, some emergency purpose, he needs 500 rupees. Okay, only in June 2028. So now what he can do? He can sell. He has 14 strips, right? Each strip will have a validity. Okay, each strip will have like Jan 2026, Jan 2029, Jan 2028. Each strip will have a validity. So he can sell this Jan 2029 strip in the secondary market. So these strips will be sold only at discount. Okay, these strips will only be sold at discount. Say suppose this strip worth is 700 rupees. Okay, because Jan 2029, whoever is buying the strip, he will get this 700 rupees in Jan 2029. Okay, so this person A, since he needs 500 rupees, he sells the Jan 2029 strip to some person in the secondary market, and say suppose it has been sold at 550 rupees. Okay, the strip value is 700 rupees. He has sold it at 550 rupees. So this person will receive 550. Now his emergency problem is solved, and he has also sold the strip. Okay, previously what happens that they have to sell the entire bond. Okay, but he only requires 500 rupees only for this year. Next year he wants the interest, so he can sell alone this particular year strip in the secondary market, and he can get the money. So this, if you see, it increases the liquidity in the market. So now if they want to sell only that, if they want that particular money in beforehand, they can't wait till that period. They can sell only that particular strip. So these 15 strips, if you see, individually they can be sold in the secondary market. They can be traded in the secondary market if that person who holds the strip requires money. So this will be equally converted into money. So this liquidation process is very easy. That is why this is allowed. So is this stripping, that is this strips creation is allowed for all state government securities? No. There are certain conditions that the state government securities have to fulfill. Only for those kind of state government securities, these strips creation are allowed. I hope you understood. The bonds, they are converted into various strips, that is interest strips and the principal strips, and each strips can be traded in the secondary market. In return, they will get the money. The person who is selling the strips will get the money. This is the entire purpose of strips. So, which bonds are eligible for this creation of strips? So, all fixed coupon bonds issued by the state government on the union or the union territories with residual maturity of maximum 14 years. That is, maturity of the bond should have at least 14 years, and the minimum outstanding should be 1000 crores. Okay, then only that state government security is eligible for strips. So these securities are required to be eligible investments for meeting the bank's SLR too. Okay, that is, you know what is SLR, right? Statutory liquidity ratio. Just like CRR, the banks have to maintain the SLR also, and mostly the SLR it is maintained in the form of cash or gold or the government securities. So these state government securities that are requesting for strips, they should be eligible to be made as an investment in the SLR also. Only those are eligible for the strips. So both these conditions and this condition should be met. And if you see, as I told you, the gilt account holders like you and me, if you want to convert your bond into strips, then you have to place the request for stripping with the respective custodians or the primary dealers. Okay. So these custodians, they maintain account with the Reserve Bank of India. The custodians or the primary dealers, they in turn will place the request on behalf of the constituents or the customers in the e-Kube. Next, so as I told you, the customer who is holding the bond will make request to the primary dealer or the custodians, and the custodians will place again the request to the Reserve Bank of India. So it is at the end, if you see, it is the Reserve Bank of India who will create the strips. And now these strips will be available in the demat account of the custodian. This is how the entire process works. Next is RBI discontinued the daily variable repo rate auction amid banking liquidity surplus. Okay, generally what is repo? Repo is when the banks can borrow money from the Reserve Bank of India in case of any liquidity tight condition. But when there is no liquidity tight condition, why is this required? This is not required, right? So that is why the Reserve Bank of India has observed that the banking liquidity, that is the banking system has a lot of money, so we don't have to continue this variable repo rate operation, that is the daily. Only this daily variable repo rate operation has been cancelled. Okay. You might ask me that there is already repo rate available. Then why is this variable repo rate also available in the market? Why is RBI introducing both? See, in this repo rate, if you see, the interest rate is fixed, right? Recently only in the Monetary Policy Committee, the Monetary Policy Committee members had reduced the repo rate. Now you have to tell me that what is the current repo rate. Okay, recently the repo rate was reduced. You have to tell me in the comment section what is the current repo rate. Okay, so this variable repo rate, if you see, it is not fixed. Unlike the repo rate, this variable repo rate is not fixed. So who decides this variable repo rate? The banks who are making the bidding. Okay, each will give one interest rate. So during the bidding process, just like how various tender are there, they will quote their own prices, and then after the lowest will be decided. Similarly, here also bidding will be done, and then accordingly, then only the interest rate will be fixed. Okay, that is, the interest rate will be decided in case of variable repo rate only after the bidding process. So interest rate is not fixed in variable repo rate, and in case of repo rate, the interest rate is fixed. So the daily variable repo rate options, due to a liquidity surplus of 2.75 to 3 lakh crores in the banking system, it has been discontinued effective from 11th June 2025. Cash reserve ratio also. So cash reserve ratio we saw, right, it has been decreased by 100 basis points. The previous cash reserve ratio was 4%, it has been decreased to 3%. So here the reduction will also increase the bank surplus, the reduction will also increase the liquidity surplus in the banking system. So that is why it has been decided to stop this daily variable repo rate operation. So, but other tools will be in function. That is, RBI will continue using other tools for liquidity management. That includes 14-day variable repo rate operation, then open market operation, standing deposit facility. These all will be available. Only this tool has been removed from the market as of now.
Thank you for watching the session. I hope you had enjoyed it. We're also available in Telegram under the name AffairsCloud_official. We also have an Instagram handle. Thank you.